2022, the year of the Ethereum merge. Where the heck is our $10,000 Ethereum, you might be asking? Well, those were good times dreaming about $10,000 Ethereum, but it seems that the bear market had other plans for ETH. But the shift from proof of work over to proof of stake has indeed been an opportunity to create new and improved fundamentals for Ethereum. Now, could these post-merge changes to Ethereum's fundamentals actually end up being a major catalyst for Ethereum in 2023? I think yes. So let's discuss. First, as a result of the merge, ETH's tokenomics are now set up to become deflationary. Now, the number of Ethereum created each year is expected to massively shrink due to the move from mining over to staking and the triple halving that resulted from that. This is going to see more than 90% less Ethereum created each year, which then combines with another deflationary feature, the burning of network fees. Now, Citibank has already come out and reported the switch to proof of stake for Ethereum has actually removed around 600,000 ETH from circulation in just the first 6 weeks after the merge. That number is bigger now. That's worth about $870 million at the time they wrote this article. But for Ethereum to go fully deflationary, the value of ETH burned must exceed the validator rewards. So if Ethereum can ramp up its users and its transactions consistently over time, well, it's going to move closer to a deflationary future, which is looking more and more likely to happen, especially considering ETH's DeFi ecosystem, the gaming ecosystem, everything happening, which is playing a pivotal role in achieving that deflationary mission. Basically, the more transactions, the more people using ETH, the more ETH gets burned. This, in theory, should make ETH more valuable going forward. Now let's talk about staking. There's been a steady increase in the amount of staked Ethereum ever since the end of 2022. Now, as this chart here shows, it seems price action isn't necessarily the leading indicator for what's happening at the moment on the network. You see, a massive amount of the total circulating supply is currently staked, and this amount is rising daily. Well, the total value of Ethereum staked across all DeFi platforms, it did actually peak at around $105 billion back in November 2021, as you can see on this chart here, but the number of Ethereum staked, it's crazy. In spite of this big loss in DeFi value and stuff, the ETH staked just keeps rising. We're almost at 15 million Ethereum staked right now. That's crazy, man. Now imagine if we were in a bull market. Currently, the staking rewards are around 4 to 5%. And we are even seeing institutions like Swiss bank SEBA launching an Ethereum staking service for institutional clients due to, of course, the increased demand from those clients. Speaking of which, it is time to talk about institutional adoption of Ethereum. You see, Ethereum's move to proof of stake has the institutions interested. They're paying attention. A research analyst at Fidelity Digital Assets thinks that the merge is likely to increase the overall levels of interest in the asset for many institutional investors. And of course, the guys at Fidelity would probably know. He also noted that particularly when we start looking at a longer time frame, the interest is going to continue to grow. And it's Fidelity, of course, leading the way here in Ethereum adoption for institutional clients. Fidelity Digital Assets rolled out Ethereum trading for institutions as of October 28th. Now, this allows institutions to trade and to custody Ethereum like they already do with Bitcoin. And they're not leaving out the retail investors here either. So when it comes to Ethereum, Fidelity is also launching a commission-free crypto trading service for retail investors to be able to trade both Bitcoin and Ethereum. Now, before telling you about Layer 2, Sharding, the Shanghai upgrade, sharing a very bullish chart with you, I just want to let you know about my weekly cryptocurrency investor newsletter. It's called Wealth Mastery. It's jam-packed with alpha on altcoins, airdrops, NFTs, DeFi, tutorials, market analysis, and much more. Join our 50,000 weekly readers by signing up for free using the link in the description. Now let's talk about Ethereum's Layer 2s driving demand for Ethereum. You see, we have Layer 2s like Optimism and Arbitrum, which are driving massive demand for Ethereum to use in trading, to use in farming on these key Ethereum scaling layers. Remember, both of these networks, they use Ethereum as their native token for gas fees. So if you want to do something in Arbitrum, you need ETH to pay for the gas. Combined, they have around $2 billion in total value locked on chain. Not all in Ethereum, of course, but still impressive. Lido Finance, one of ETH's biggest staking providers, also launched on the Layer 2 networks, thus bringing staked Ethereum to Arbitrum and to Optimism. That's a move basically bringing us towards a situation of improving accessibility to Ethereum staking while reducing gas fees, making it super cheap for people to do. And with major players like ZK Sync and Starkware still on the way, demand is likely to rise even more for Ethereum. Now let's talk about tech, in particular sharding. Now sharding is the feature that would solve the issues with scalability for Ethereum, and it will be a game changer for the network when it happens. Now, this is how ETH gets to 100,000 transactions per second. Crazy scalability. Currently, the network can only process transactions one block after another, whereas when we get sharding on board, you're going to see the network being able to process multiple blocks of transactions at the same time, basically sharing the workload. Not only will sharding improve the speed of transactions, but it's also going to lower gas fees as multiple requests can essentially be handled at the same time. This is due, of course, for delivery in the second half of 2023. Fingers crossed, devs deliver on time. Of course, that's part of the surge, which was recently published here on the roadmap, as you can see from Vitalik Buterin. So with lower fees and quicker transaction speeds, as well as, well, basically most of the dApps that people want to use being on Ethereum, it's likely we're going to see more users come into the Ethereum network and thus create more demand for Ethereum. Next, let's talk about the Shanghai upgrade. Now, the Shanghai upgrade is one that Ethereum users have been eagerly waiting for a while now. It addresses two very big issues for Ethereum. First, those who have staked their Ethereum, that was a one-way trip basically. It's been locked up for a long time. They cannot withdraw their deposits yet. This upgrade will allow for withdrawals to begin from the Beacon chain via Ethereum Improvement Proposal 4895. And Shanghai will also be making changes to equalize block sizes and to allow for more data to be processed on the network, thus decreasing the gas fees. Shanghai is also expected to deliver EIP 3540, which relates to the Ethereum virtual machine, the computing engine of Ethereum, if you will. This will see code and data end up being separated out within the EVM, making it easier for future changes to actually be made. Now, this should, in theory, make it easier for developers to integrate smart contracts into Ethereum applications and to help boost network usage, thus creating even more demand for Ethereum. This release hopefully coming early 2023, however, it has not been finalized yet with developers. And now let's bust out the Hopium. Take a look at this chart here. It's the Ethereum Bitcoin chart, basically showing that Ethereum has been in a massive triangle for years, forming up for a move, potentially anyway, that could be one for the history books. Could this be the prelude to the Ethereum flippening, where we see Ethereum become the number one coin and Bitcoin become number two? Who knows? One thing is for certain, 2023 does have a lot of exciting developments in store for Ethereum. Okay, that's it. Subscribe now. See you next time.